Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the Dow Jones on a daily chart, and I just wanted to have a look at the bigger picture here and just explain the possibilities here. The two wave counts are that we have, this is an A wave to here, a B wave to here, and then 5 waves in a C wave to complete this particular rally that we're looking for here. To really see a breakdown of all of that and to sort of confirm that, we would need to see a strong impulse wave to the downside in 5 waves, or a break of the 13,000 here, which is the major trading level through here. So this as resistance would see that. On the bullish side of things, then we would consider this as the wave 1 here, the A, the B and the C for wave 2 here, and then the wave 3 with the 5 waves inside of that all the way to here, and then the 38.2 retracement level would come in at 13,200 here, which is the first sort of level of support as well there, and also trend line support as well. But wave 4 normally breaks the trend line through here as well, so we can kind of expect that to occur if that's going to be the case, with another push to the upside here. So that's pretty much the two wave counts. The other wave count that we've got is having this here as an ABC correction in through here and then pushing up through here as well. So that's a possibility as well. So we'll look at that there. To look at the current situation around here, it's interesting because we've got the Dow Jones that on the futures that made a new high. The futures contracts on the S&P didn't make a new move up through here. So there's a lot of unresolved wave counts within this pattern here, and I think that the best way to handle that situation is with the US dollar, because the US dollar is quite central to obviously the currencies and the commodities, etc. And really quite simply here we can see that on Thursday we were looking at this reaction from this level here, and we were looking at a hopeful 5 wave structure to the downside, but we didn't get that. We only got the 3 waves to the downside, which is corrective. So a move back up through here through the 79-72 area here, which would have been the overlapping of wave 1 if that was going to be the case here, the wave 1, wave 2 and wave 3 here. So the breaking or the move up through the low of wave 1 here would have broken the one of the Elliott rules and therefore created further upside. So this particular 3-wave structure here would obviously see new highs being made above here, a bit like this 3-wave structure here as well, and moving up through here basically and taking that high out there. So we can expect that to be the case. It does count quite nicely from the, and we'll look at this in the currency section, it does count quite nicely 5 waves moving up through to here at this stage here. So it would really just have to fail from here and move directly down through here for stocks to move to the upside, and currencies to move to the upside as well, and commodities to the upside as well. So it really needs to just fail here. Now, because we've had 5 waves here, and we've hit on 80, it's going to have some sort of reaction through here. It may pop up to the, up to here a little bit or whatever, but it's going to have some sort of reaction. If that reaction here is corrective in 3 waves, then we're going to see further highs up through there. And that's a real possibility as well, because when you look at this sort of picture through here, we can see that it's the basic trade of what's sort of happening through here is that this move up through here is actually expanding. The trends are getting bigger, the corrections are getting bigger. It's actually just, the ranges, it's just basically expanding to the upside, which really is a strong attribute to this particular move coming up through here, even though that we consider it a wave 4 rally coming to the upside here. We have to be mindful of what's occurring as well through here. So that's one thing there. So support on after a reaction here and finding support on here, that would create downside for the markets. for the indices and currencies and commodities and so forth. So when we're looking at the Dow Jones here, for instance, on the 2-hour chart here, and looking at the high that we had in at the equinox through here, and yeah, so look, what we've got through here so far appears to be a 5-wave structure to the downside, in terms of the 1, the 2, the 3, the 4, and the 5, which counts quite nicely for that downward move there. That would make the 61.8 retracement level back into the 13.5 area, 13.556, I think it is, through here. Yeah, now this can also be down for wave 1 in 5 waves, or an A wave, an A, B, and C back for wave 2 or the B wave, and then down again as well in another 5. If we've got 5 here, if that is the case, then we'll get another 5 through here. So the 13,500, as you can see here, and this is a very important number as well, it's halfway between 13,000 and 14,000, so it's a line in the sand. It's a minor trading level, and 5 is the second strongest number, so it holds a lot of sway here, and it's had its first retest and failed from that point. This ABC here, look, it could come higher, it could stay lower and not get above there. Anything could happen, but what we're looking for is, you know, some type of simple type of correction through here, a little bit like this one here perhaps, in terms of the A, the B, and the C, or it could be something like this where it's got a high, this one here retraced quite high through here, coming back up, you know, well beyond its 61.8%. So this one here could also come back up to the 13.6 as well. But this, after it's done some type of corrective pattern through here, then we can just look at this as being support or resistance through here. And if it's resistance, then we'll move further to the downside. Now the S&P 500 didn't quite make a new high here, so we need to take that in consideration as well, but that also makes it count as an ABC to the downside as well, and that's the way we've been sort of also looking at this as well. So the high is over here. We could call this the 5th wave here, as we did earlier during the week, but I just want to explore other possibilities for the time being here. But once again, what we're seeing here is that our midpoint here, 50, that was support, is now resistance. Okay, so we've had the first failed retest here, and the 144 is going to be important as well, we mentioned before, and we'll see that become more so as time goes on through here. So I'd suggest by Tuesday, Wednesday, all of this will be resolved somewhat, maybe earlier, but we'll see how we go. If in terms of trading, if the 1450 becomes the support, then you can trade long from that point. And the reason for that is because this particular move down through here, if this was a wave 1 down through here, a move back up through that, taking this high out, this low out through here, would simply create overlapping wave structures and make this whole thing corrective. And that way we would know that we'll be in a bullish move, making new highs above the previous high over here. So that's important. So move up through, especially on the cash market, you know, up into this little area here, the 1453, say, whatever, would help that. So just bear that in mind. So, you know, move up through there, and then support on here would create the upside here. If it fails to do that, we'll be looking at some sort of corrective move through here in line with the Dow Jones that we just looked at. But finding the 144 here as resistance, then we would see further downside there. The European markets, well, we've got the DAX, which follows the Dow Jones, and the FTSE is sort of out there on its own, really. So on the DAX here, we've got as you can see, we had wave 3, wave 4, wave 5, and now we're looking at this 5-wave structure to the downside. Now this 5-wave structure to the downside should find some sort of bounce off the 72 here, so we can call this as wave 5 coming down here, but it could just be the 5 waves down as the A wave or wave 1, so that's what we don't know. But either way, we'll get some sort of ABC coming back as well, and then we'll get another 5 waves to the downside as well. The Australian market is hasn't moved down as much as the European markets have. As you can see here, this whole correction at the top here, or this whole pattern at the top here, is quite confusing. And Elliott wave is good when you've got a clear structure, and it makes it easier. But in terms of what we're seeing here, it's just complicated. This move down through here can be counted both ways. This move up here can be counted both ways, well, more so three waves actually. So that is a concern through here. So we just really got to start working with the levels and the price. We can see that there is support here. So that 43.30 is going to become important. This trend line here is also important as well, which comes in from the lower area down through here. So that, as always, the 42.72 is going to be really important as well. So if this breaks here at the 43.30, if that breaks, then expect the price down here at the previous lows down through here at the next support level. So there is short-term support through this trend line through here, so that's worth considering as well. But in looking at this section through here, we were looking at this on Friday as the 1, 2, 3, 4, 5 through here. That's really come about quite nicely. So we've had our move back down through here, but we need this move down through here to be an A, B, and a C through here. We don't particularly want it breaking this trend line through here. If it breaks the trend line through here or finds the 43.50, the midpoint here, as resistance, then you know it's weak from that point and you need to find a setup from that point. If, however, on the bullish side that we see the 43.72 finding support, then you could scale in a small position there and then one on top of the 80, and then we can look to have new highs over here. This move down through here doesn't bear well as a corrective wave so far. It is corrective so far, but it could turn into a more bearish picture quite easily as well, and we need to be mindful of that. And we're moving into October now, and October is known to be the bear month, so we need to take that on board. Some of the triggers this week would be, it's really a week of manufacturing. We've got manufacturing figures coming out for China on 11 a.m. We've had the Chinese markets too are interesting. Let me just have a little look here. This is the Chinese market here, the Shanghai here. So we've got the bounce off the 2000 that we're expecting. Also, China is on holiday, got a holiday all this week. So there's not going to be, I think that their markets are closed, but they're certainly on holidays this week. I need to double check on that. So we've got this bounce off the 2000 here. So we just need to see how that pans out. But obviously, there's going to be resistance in that particular area through here, of course. So just bear that in mind here. So that will bring us into the 21 here. So normally with bounces, we'll see the bounce hitting supply here, finding another high here, and then testing back down through here as well. So we'll see how that goes. But that's where any sort of support will come from there. And the manufacturing figures, the PMI figures, are coming out on the Monday. So are the manufacturing figures for the UK coming out as well, and there's also manufacturing figures coming out for other markets during the week as well. So we've got the ISM figures coming out on Wednesday as well. Thursday is a big day too for a lot of facts and figures coming out, so just be aware of that. And we've also got the RBA rates coming out on Tuesday as well, which is always a guessing game. They don't normally change them if they don't have to. We'll see what comes from that point there. But if they don't change them and the rates are left at 3.5, then that makes Australia quite an attractive place to park Australian dollars, because out of the 7 countries that have got AAA ratings from all the agencies, the Australian one has still got the highest interest rate there. So it would be quite attractive for offshore money to come in terms of in terms of buying companies for start, and also safety for in terms of the bonds market and getting return as well. So it should be interesting a week ahead. Let's have a look at the commodities as they were positive. Okay, let's start with the gold market this time, and as you know, the US dollar index is at 80, and you can see here that it's affected the gold price here, plus being the double top as well. It's obviously going to get sort of sold off. So we're counting this here, this third wave here, as an A and a B and a C wave, which is nice. And then we've got the third, the 5-wave structure moving to the upside here. If this wave 4 here starts to overlap wave 1 here, then there's a problem with the wave count in going up through here, and then we would have to look at still staying with a corrective pattern, but we would have to see this as this ABC down here as the A wave. This up here is the B wave, staying as 3 waves up as an A, B, and a C here for wave B, and then we would have to look at 5 waves coming down through here as a C wave. So it would be an A wave, a B wave, and a C wave coming back down to here, and then pushing back up through there. We know that it's corrective because we've got this very clear 3-wave structure here. So we know whatever happens out here in the future is also going to be as corrective as well. It's just how large it's going to get. If everything goes according to plan, then if this stays, say the price stays above the 1760 here, because there'll be a reaction at the 80 for the US dollar index, then we can see a push up through here, and support on the 1772 will give you an opportunity to scale in here, and then on top of the 80 here. The wave 5 here should be the same length as wave 1 through here, so that will take us pretty close to the 18 up there. So that's worth watching. The other side of the metals is obviously the base metals, and looking at copper here. So all the base metals overnight were quite steady, so that's going to stabilise the material sector as such. And we've got this breakout through here, which is quite nice here. This move up through here is not as nice looking as gold or oil and the other commodities. It's a bit of a rough diamond, but we'll just stay with, instead of pulling this apart through here. This is obviously a little wave 4 coming back, if that's going to line up with the Dow and with the gold and so forth. The main point here is that we had our 38.2 retracement level come in for our wave 4 correction, so we'll see how that pans out here. But a breaking of the 372 there is obviously going to cause some problems there, and that's really going to be dictated by the US dollar, of course, because these are traded in US dollars. The oil market is as well in its rally, so very much like the gold market here, we've got the 1, the 2, the 3, the 4 coming in here. The 4 could get a bit uglier because that's what waves 4s do. They're normally sideways and complicated. Once that's completed, seeing a wave 5 coming up through to here, which is our sort of target really in terms of the supply area of 93, the top of group 1, and also 95 as well. You can see here that that's going to be the next situation here. So we should see, all things being equal, some sort of correction here, some sort of 5th wave here, which would make the A wave. So we've got 5 waves for the A wave here, then we would see the B wave coming back in 3 waves here, something, some B wave back into here. The B wave normally pulls back 61.8% of the A wave there, and then if that's done and dusted correctly, then we'll see a C wave test supply at 95 there, and we should see it roll down from that point there. So we'll see how we go with that. Right, okay, let's have a look at currencies. Okay, the US dollar here on the daily chart here, we can see that it's retesting the 80 here of the orange line through here, and we're still considering this a wave 4 until proven otherwise. Yeah, so I feel quite comfortable with that. However, there's just that extra little wave in there that we talked about earlier that needs to be taken into consideration. But we can still see that we've got this sort of long 3rd wave through here. So yeah, let's just let me just check on here for a second. Let's just check. Okay, so that being in mind, we're still seeing this as corrective to the 80 here, but there is no sort of real sort of consolidation here previously at this level here. So it means that we need to look up to the first consolidation, which is in here, which is also this 38.2 retracement level here, which brings us into the 80-70 area through here as well. So just bearing that in mind in case we do find support on here. But this is breaking it down on the 20-minute chart. What we're doing yesterday is we were looking at the reaction it had from here, and we were looking at this as being down for 1, back for 2, and a third wave coming down, and a fourth and a fifth. But obviously that never occurred. So we've just got we need to label this now the A, the B, and the C, and since we relabel that or rework that wave count simply because the move went through this low here of wave 1 coming down, this little 5-wave sequence here, 1, 2, 3, 4, and 5 here. So anyway, we just need to label that an A and a B and a C. What you can see here, though, is quite clearly is we've got a nice 5-wave structure through to the upside here. So it certainly can fail from this point here, and we can bring that as being the top of wave 4 over there. So we'll have to put this wave C here, C through here. We would have to rework the wave count coming up through here, but it would just be a different corrective pattern coming up through here. So look, it really needs to fail through here at the 80 this time. If it does develop support on here, then it will develop support in this particular fashion here. It would have some sort of A wave here, then it would have some type of rally through here as a B wave, then a C wave through here as such, and then a push to the upside from that area there, and we would have to look at this being a wave 1 to the upside and a wave 2 to come back to the backside here. Yeah, look, it just depends on what occurs through here. It either fails from here, or it has a corrective pattern here and develops support on here and then moves up. So this is the simplest way to work out what's going on in all the other markets as well. But as you can understand, that's going to take possibly 1 day or 2 days to actually develop into some particular pattern through here. So that's what we're sort of waiting for here. So we need to be open-minded about being bullish in markets or bearish in markets. So with that in mind, when we're looking at the Australian dollar, for instance, with the Australian dollar, we're looking at we've just really been following the structure as it stands, because we've got this ABC pattern down here. So in the bigger pattern, we were looking for a wave D coming down, for a wave E coming as a triangle coming through here. So this whole triangle pattern we've been working through here, the A wave, the B wave, the C wave, the D wave. The E wave, it would have been nicer if it had come down here further, but it just wasn't to be, because we've got that impulsive wave structure through here. We need to take that in consideration and label this wave 1 through here. And this is a bit like the ASX 200 really as well. It can have that same wave count of being up for 1 here and back for 2 in this area through here. But in this case here, we've got this pullback through here as being a 61.8 retracement level through here. But we could say that if it does test lower through here, then that trend line will become significant as well, as will the 103 here as well. But if we get a clean breakthrough here, then we really need to reassess the CE and of wave 4 here as well coming up. So that wave D here would actually be over here in terms of an A wave, a B wave, and a C wave for the wave D here, and then a move to the downside. And that's possible as well because we're getting a lot of weight sitting under here now as well in relation to proportions and ratios. So if this wave 1 coming up through here, this wave 2 coming back, it's starting to spend. It can get complicated here, but we don't want to spending too much time here. We want to see it get a move on up through here. We don't want to see more time and more days spent on the corrective pattern than on the bullish pattern here. Otherwise, the bias changes somewhat. So if we had to view this as a corrective pattern through here, as an impulse wave to the downside, we would sort of look at it being a little bit like this. And I have labelled it as an A and a B in terms of this is just for exploring really, but this label here would be wave 1, and this label would be wave 2 over here. So this would be 5 waves down through here, and then an A and a B and a C for the A wave, then an A and a B and a C for the B wave here, and then the C wave up here in 5 waves, because we did have 5 waves up through here. And we also have 5 waves down through here as well. So if we've got 5 waves down through here, we would expect some sort of rally back up through here. And then if it fails at that point, then it would move down further. And it becomes sort of interesting at that point there, because as you can see, well, you know, we know that being under 105, we just don't have any serious positions going long until we get support on that level. You know, the motto is that we need to be working off the closest, largest number all the time in that direction. So we haven't had that now. So, but what is becoming interesting is that this 104 here is becoming quite central as a balance line through all of this as well. So if we do have 5 waves down through here, we would get 2 things can happen through here being bullish and bearish, is that this can still be up for wave 1 here, so we've got it labelled on our charts, and this would be an A wave, then we'll have a B wave through here, and then we would have a C wave through here as well, and then we would have the move to the upside from that point there. Now, if that wasn't to be the case, then we would see the move come to the downside from here. So we need to allow this 5 wave structure down here to it's completed now. Then we'd need to see a bounce back up here, see what that's like, either in 5 waves or 3 waves, and then back down here again. But in simple terms, that if this 72 here became the resistance, or the 104 became the resistance as well, then you can look for short trades in that area there. But given it some time here, like the US dollar at 80, given it time here at the 104 to have a few swings across here and then to settle in as support or resistance, is where you'd pick up the trade from. On the short side here, there would be solid support through here as well, in the 102.72 here. That would be strong support here. So we can label this as an A wave to here, a B wave to here, and 5 waves in the C wave to here as well. But it also can be labelled as a wave 1 and a wave 2, and a much larger move to the downside occurring as well. So there's a lot of ways that can be counted through here. But let's just take the next step and let's just see how it develops on the Monday and the Tuesday around these areas through here. And as mentioned, the RBA rates coming out on Tuesday, and we normally see a bit of a rally on that, and then then selling off from that point there. But the bias is obviously to change rates to the low side rather than to the upside, so they'll either drop or they'll stay the same. So I can't give any advice on that, but my sort of observation is that if they don't need to change them, then they won't. And do they really need to change them? I don't think so. So there you go. Alrighty, and the euro's in the same sort of position as well in terms of talking about the US dollar at 80. So support on top of the 80 would send the euro further to the downside as well, which would sort of really test our wave 4 here coming in through here. If this market moved all the way down, started to come way down here further, then we would have to look at this as being not an impulse wave to the upside, but an A and a B and a C wave to the upside. But I just want to stay with what we've got for the time being, because it's the most logical point to work with in this structure through here as well. This structure down here is quite difficult to count, but it does count better as a corrective wave, so we'll stay with that. It can certainly make a new low through here. This move through here is corrective if this gets taken out through here. So let's just see how that deals with the 128 and how the US dollar deals with the 80. That's what it really sort of boils down to. This this move that we're looking through here. It certainly counts as, this is a low on the euro, it counts as an ABC to the upside in terms of an A and a B in 3 waves here, and then a C wave to the upside here. This move to the downside here counts in 5 waves through here. If we just have a smaller look at that here. So it moved down overnight through here. That's the top of the C wave here on the 5-minute chart here. So we can see that we've got down for 1 here, back for 2, then down for 1, 2, 3, 4, 5 for the 3rd wave, the 4th wave and the 5th wave here. So we've got 5 waves down through here on the 5-minute chart here. So we're going to get some sort of rally back up into this area through up here. So you could work a long trade off the 128.50 if you wanted to buy on the low through here and look to add through here. So this could be the low of the wave 4 that we're actually looking at through here as well. So just like the US dollar index. So we just don't know. So let's just give it a session to work through, and then we'll be able to work off those support and resistance based on the 80 with the US dollar. Alrighty, well, good morning and good luck.